Hello, good morning, everyone. Hopefully you're all... Hey, there we go. Hey, good morning, everybody. Good to see you. Welcome to another Wealth Coffee Chat. What is it today? Thankful Thursday. Sometimes, I don't know about you, lose track of the days. Big shout out and hello. Good morning to Alison, Aaron, Deb. Good to see you. Tim. A few of the regulars here, which is awesome. Welcome back. But want to do a bit of a shout out to someone or some of the listeners who might be new. Hello to you. If you are new, let us know. Jason Witten's my name. If you didn't already know, welcome to Wealth Coffee Chats. We get up to this show each weekday, usually around about 10 past 8. Depending on what's going on with the tech and the technology, but good to see all of you online. Let me know if you're new. Give us a shout out where you're dialing in from today. It's always nice to get a bit of feedback in the chat. I've been doing this for a number of years, about 3 years for the Wealth Coffee Chat. It's been property investing well over 25, actually. 25 years. Been coaching property investors just like you for 20 plus years. So along the way, learnt one or two things and... We hang out and share them each morning on the Wealth Coffee Chat live stream. So welcome along. Good to see all of you. Oh, awesome. Angela's new. Great to see you, Angela, all the way from the sunny coast. Thanks for joining. Fantastic. We've got Julie in the house. Adrian. Hey, good morning, Adrian. Good to see you. I think we've got Donna there as well. So, hey, thanks for hanging out and joining today, team. Hey, back at you, whoever that is. You're probably in one of the private Facebook groups, so we don't get to see your name. It's a bit weird that with Facebook, but I don't know what to do about that. So, hello, whoever you are. Good to see you. Hey, listen, today I thought we might talk about the idea. I think we might talk about the idea of what is the cost. What's the cost? What are the things that can throw us off when it comes to building our property portfolio? The difference between an ideal outcome, the outcome that you want, and a disastrous outcome. And unfortunately, quite sadly, for many property investors, if they don't organise themselves in a way where they improve the likelihood of succeeding into the future with a few of these ideas I'm going to talk about today, the likelihood is very low. All right. And I'm talking about the ownership of 6 properties, 5 investments plus a home. What's the percentage in Australia? Some of you have heard this before. Does anybody know? What is the percentage of Aussies who own 5 or more investment properties or 6 properties, including their home? The percentage is super low. Of 26 million people in Australia, the percentage is approximately 1/10 or 10% of 1%. Donna, The percentage 1% is three or more investment properties. So that's what we call the 1% club. But those who get to 5 plus 6, their home is, again, this unique club, this unique bunch of people. What does it take to get there? We've talked about this. I talk about this all the time, right? What's it going to take to get from where you are now to that ideal outcome? And let's just talk about the ideal outcome right now. What do I mean in the world of ideal outcome? So I'll put some framework around what I see commonly. A lot of people who I talk to, property investors I talk to, so they want X or Y. They want a passive income. They want to create some wealth in the future. What does that look like? Let's put that into practical terms, right? The idea, having an ideal outcome, which means often 5 to 6 properties, including your home properties, aiming for 100K in cash flow, positive cash flow, passive income, passive cash flow, okay? And ideally up here, having this amount of money, that's a minimum starting point of tax-free. Put a little Y, put a yes, put a Y in the chat. Would you like to arrive here, this ideal outcome of $100,000 tax-free for the rest of your life at the right point? 5 to 6 investment properties, your own home paid off, so debt-free PPR. I'll put that in here. Debt-free PPR, principal place of residence. Put a little yes in the chat for me if that's what you want. That's an ideal. That's at least the starting point of an ideal outcome for property investors. Because I can tell you, with many property investors I sit down with, that version of the world, one way, shape, or another, is what we're aiming for. We want to build our portfolio. We want to purchase enough bits of real estate to make it work, to make it worth, and we want it to be efficient. We want to have our debt-free home because that debt on our home is inefficient. We want the money we earn into the future to be efficient, so we're not eroding it with taxes and other expenses. That's a minimum ideal outcome. There's certainly some other outcomes that might be a little bit more, racy, a bit more sexy. But let's have a look at that. What's a disastrous outcome? Well, a disastrous outcome, unfortunately, I have sat down with many people in their late 50s and 60s, and what's a disastrous outcome? Well, they are renting still. They're on the pension. And I'm talking about financial. I'm not talking about someone's mental or emotional capacity here, folks, right? So, you could be happy as a pig in mud down here, with your life at 70 and have nothing. And you could be miserable prick and have everything, all right? That's what can happen, right? I'm talking about financially, money, renting, on the pension, no assets. No assets at all. What's the average amount of super that the average Aussie retires with? It's a disastrous amount. It's quite horrid, depending on where you have a look at the average or the median. But average for men is around $130,000 in their super, 130 grand. After 40 years of work, yeah, that's true. After 40, 50 years of work, they end up with like 130, 150 grand in super. Disaster. And unfortunately, ladies, the average ladies' super balance is under $100,000. Just crazy. It's crazy, right? Disastrous. So we don't want to end up here. Like, this is why. Well, like what happens here for people? What happens for Aussies that might start out with, hey, let's get some financial capacity in our life and see what can happen as we go along. Because I can tell you right now, right now, if we start out today, the cost of this gap here, now I've done a little bit of an analysis, as I like to do, and you guys should be doing this as well. I've chucked up a very basic portfolio, and the difference, let's say, the difference in 15 years' time, let's just do 20 years, actually, because it actually makes it a bit more interesting, right? Let's do 20 years. 20 years as we go. Right, let's have a look at this. Here's the difference. Here's the big kahuna difference when it comes to the analysis on these two trajectories. Let's quantify. Let's put a dollar amount. This is 6 pieces of real estate purchased over a 20-year, purchased, owned, and kept over a 20-year period. Some very basic, very simple mathematics in here. You could plus or minus this 20% if you want. It's still a pretty good bloody number. But let's just do the math. When you have a look at the market value here of your real estate and or the equity, we'll call it the equity, right? The net value, right? The difference between a disastrous outcome financially and, I've got to come over here, the quantifiable difference, folks. This is quantifiable, right? Over a 20-year period between ideal and disaster is $10 million. That's the quantifiable difference. And when you put it in perspective, when you put it in numbers, it's like mind-blowing. The difference between doing what it takes to stay on track for this and things happening like this, sometimes, folks, sometimes that can happen pretty quick, right? Okay, that can happen pretty quick. There can be some things that don't go your way, when as a property investor, we lose track of the distance. $10 million. What do you reckon? Has anyone ever quantified that? What do you think? Put that in the chat. Mind blowing. Like the difference between staying on track in 20 years' time or going off track disastrously is pretty significant, folks. Now, if we said that's a 20-year timeline, it does take the first 10 years, and all of you know this, it does take the first 10 years to really get things going. That's the hardest. It's the hardest, it's the hardest part of building a property portfolio, the first 10 years. You got to do, the acquisition, you got to do the consolidation so you can get into the lifestyle phase. There's lending and there's acquisition and there's loan to value ratios and there's all this stuff, right? There's all of this stuff. Then you got to learn, to sort of make sure you hold these things for the time frame, and then only then will it work to get the outcome. At the end of the day, along the way, you might as well give it a whirl. You might as well give it a whirl because that's great. Yeah, I know which one I want. Yeah, me too. Me too, folks. Right. For you and I as property investors, the yin and the yang of this is that it actually doesn't take a huge amount of effort, but sometimes this can be bit by bit good or bit by bit not so good. All right. So what are the 3 big things here for me, for you? Let's quickly chat about that because I think this is important to understand. What are the 3 big ones to stay on track for an ideal outcome, folks? Ideal or end up as a disaster. Right. Why don't you tell me in the chat? Number one thing. Now, the overall of these 3 things is you must understand how long it's going to take, right? Which is 20 plus years all in all. I got that in there. But what's the first one? What's the first number one thing to be able to get that ideal outcome? The difference between a disaster, that's a disaster, and getting an ideal outcome. They don't have any, they have no what? It starts with T, right? I'll get on with it. It might take a while for everyone to get in there. They don't have a team. And more importantly, yeah, the bottom one, I think you've got on that one, no team and what we call a 6-star team. Okay? They don't have a team, folks. If you think you can work it out all by yourself and go the distance for 20 years, Han Solo or Frank Sinatra, I did it my way, you got rocks in your head. I'm telling you right now, I've seen so many ways this can happen and ends up as a disaster when you don't have the right team around you, and you need to get the right team. The right team. If your commitment is to building a property portfolio, you've got to get a team of property positive team around you who are going to take you along for the ride. Get the right team. If you don't have a team, you'll get lost along the way. Disaster. Second one, what do you think? Oh, they believe they have plenty of what? They believe they have plenty of what? Tell me in the chat. Oh, it's all right. I'll get onto it next year or the year after or the year after. You know what? I'll just sit around. I'll wait for a couple of years, see what happens, right? They believe they have plenty of what? Time. Yeah, you don't have plenty of time. I'm here to tell you, the longer you wait, the bigger these gaps become, the harder it is to cross that chasm, folks. And they believe they have time, and I'll put a second layer on that time, because what ticks along, what is the thing? As we go, time waits for no one. Yep. As we get a bit more mature and older in our careers and our jobs, two things happen. And this is sad, but just the way it is. If you peak in your earning potential, past a certain age, your earning potential goes down. Also, the interest of financiers lending you money goes down. So, the clock is ticking, folks. Kind of that the 20 years between 30 and 50 are the prime years. 60 to 70, that's much more difficult. And then 20 to 30 is much more difficult too, because at both ends you're earning not the most, all right? So time waits for no one. You think you have time, you don't. And last but not least, this is the one that drives me insane, right? Changing the plan, and we had it before, not having a plan, right? Changing the plan. You get all fired up. You're like, yes, beautiful. 3 years in, you've got 2 properties, this is not happening fast enough. Whatever it is, changing the plan. I'm going to invest in Bitcoin. I'm going to do something else. Like, are you serious? Property takes a lot of resources to get it going. Leave it alone. Don't change the plan. The plan's this, folks. The plan's this. Here's the $10 million plan. All right? It's not hard to comprehend. Buy 5 investment properties, plus own your own home. Leave it alone, or make sure you maintain it best you can to end up with a debt-free principal place of residence, a tax-free income of $100,000 plus in the future. Yeah, the good time Charlies. Come along. If it doesn't work in 5 minutes, they're out of here. I tell you what, every single property I've ever owned has gone up and it's gone down. Every property I've ever owned has given me increases in rent and problems with maintenance. Like, don't kid yourself. There's no easy process when it comes to owning and building wealth when it comes to real estate, but it is worth it. You just gotta be there when it turns into the income that you desire. So anyway, there you go, folks. I think we're done and dusted. 8:32, almost finished on time. Wealth Coffee Chat, done. It's a $10 million, we quantified it today. It's a $10 million commitment. I'm telling you, get it going, keep it going. Don't get off track. Don't be a good time Charlie. Don't be a sad sack or a victim. Oh, the interest rates went up and now my life's a disaster. No, when you got the right team, they would have helped you get ahead of that. They would have helped you plan. You would have been told to put a buffer aside. They'll be telling you right now, listen, don't stress, the rents are going up. The rents are going up in record pace, et cetera, et cetera. The people who haven't got teams, the people who are doing it by themselves are selling their properties, for less than they should be. And when 2 or 3 years' time they think they can get back into the market, the properties will be up 30, 50, 100 grand. Telling you right now. Anyway, I'm getting a bit distracted. Let's finish this thing. All right. Well, it's Coffee Chat, done and dusted, folks. Thanks for all of you to show up today. Nice to hang out. Make sure you join me tomorrow for another one, 8:10. You guys know the drill. But there you go. I think that's about it from me, team. You guys be awesome. Have a great day. Remember, this thing's a marathon, not a sprint. It takes some time. Buy well and don't bloody sell. That's it. That's it. It's going to take some time and buy some good stuff. Anyway, I better stop now. I'm just rabbiting on. See you, team. See you tomorrow.